I like how you say you're opportunistic, and that enabled you to think out of the box.
I understand that in our digital world, we have to fight for people's mind share. I'm just doing what I can to stay in front of people and stay top of mind and make sure that people remember to being more growth oriented and just owning your world, right? If you live in a world of chaos, own that.
Hello everyone, and welcome back to the Path of Progress. I'm your host Alex Kononov, and today's guest is someone who's all about helping people build financial freedom through smart real estate moves, and doing it with clarity, confidence, and a whole lot of practical advice. I'm joined by Tyler Gibson, founder of GPG, a real estate consulting team based in Central Florida. Tyler works with everyone from first-time homebuyers to experienced investors, and he's also a content creator, educator, and real estate investor himself. Tyler, welcome to the show.
Hey, thanks for having me, Alex. Glad to be here.
It's my pleasure. Tyler, let's start with your story. How did you first get into real estate, and what led you to launch GPG?
Sure. Well, when I got started and when I launched GPG, they're several years apart. I'll just put it that way.
Very good.
Shortly after getting married, my wife and I had already purchased our primary home. I had gotten a salary job. She had a salary job, and we lived very modestly. We lived below our means, so we had monthly savings that we were putting away. Not a ton, but we had some. And I came home one day and I said, "Hey, we should buy a rental property." And my wife looked at me and in a rare moment in time said, "Okay." And that's not to say that my wife doesn't ever agree with me, but typically she's got a lot more questions. She's very detail oriented. She wants to see it on paper, but she just said, "Okay." And we called up our real estate agent and I told her, "Hey, I'm looking for something that's within a couple miles of my house and under $25,000 or $150,000. And she said, "Okay." And she put me on an auto drip like most real estate agents do. And I think we went and saw a total of 3 properties before we decided to make an offer on the third one. And it was a little 2-bedroom, 1-bathroom bungalow near the downtown Orlando area. It looked like it had been somebody's mother's house and maybe that she had passed away and the kids were just selling it. It was otherwise in moving condition. There was some termite damage, but otherwise it was in moving condition. And the only way I was actually able to acquire this was because I went to my dad and I asked if he would actually be the bank, if he would loan me the money. I told him I'd pay interest and all of that, but I asked if he would be the bank. And part of the reason why I did that is because he had actually modeled this behavior of buying real estate and keeping it as rental properties throughout my childhood. And that was really the inspiration for why I even came up with this idea anyways. I had seen him do it as I grew up. It looked like he was doing pretty well by doing that. And so I approached him and said, "Hey, I think we'd like to buy a rental property. Would you be the bank?" To which he said yes. And so he loaned us the money. We bought the property. We put a tenant in it right away. And I got that first rent check for $1,000 in my mailbox, and I was hooked. I was so excited to get passive income, truly passive. I remember running inside, standing in front of my wife, jumping up and down with $1,000 check, going, "We got $1,000 and we didn't do anything. This is the best kind of money." To which she replied, "Well, our mortgage is $600, so we didn't get 1,000." I said, No, we got 1,000. We didn't make 1,000, but we got 1,000. So, but anyways, that was really the beginning. And after that first rent check, I was like, well, I really got to figure out how to make more of this kind of money because this is the best. And so I went online and I started searching. And honestly, I was Googling, looking for an analyzer spreadsheet, something I could use to analyze real estate as an investment to figure out whether or not it's a good deal. And that actually, one of the search results was a spreadsheet that was in a BiggerPockets.com forum. And this was long before BiggerPockets had any kind of calculators on their website or anything like that. And I downloaded that spreadsheet. I think I still have it to this day. I use it from time to time still. And I just started analyzing deals. And as a result of finding it on BiggerPockets, I actually got really involved in the BiggerPockets community, started listening to all the podcasts, started learning so much about all the different things that are possible in real estate. And really that was kind of the start of the whole thing. And I just became obsessed. But I traveled a lot for work. And so it was at the time. And so it was really challenging for me to get involved in local meetups and networking or anything like that. And so it wasn't until many years later Well, a few years later, I partnered with my parents and we acquired another property through a wholesaler that we still own today. And
But
then,
even when you traveled, you still had time to listen to podcasts, right? So it
correct, right.
enabled you to do this kind of stuff. What year was that when you got your first property?
It was 10 years ago. We
10
bought that
years ago.
first property in January 10 years ago. So that would have been 2015. January of 2015 is when we closed on that first property. It was a really good time to buy real estate here in Orlando. The market was just starting to recover from the '08 recession and the '08 market crash, and properties were just starting to come back up in value. And so it was a really good time for us to get into the market. We still own that property today. It's still one of the best investments I've ever made. It's probably number 2 right now in terms of best investments we've ever made. But I worked traveling a lot, and so yeah, we listened to a lot of podcasts. I mean, I just consumed content nonstop.
Let's talk about the numbers a little bit. It's been 10 years ago, so it's been quite a while. So how much did you pay for the property?
We paid $115,000 for the property in 2015.
Okay, what is the worth of that property nowadays?
I could probably sell it as is for to one of the all cash buyers for 250. And if I was to renovate the kitchen and bathroom and update it, I could probably sell it for closer to 325.
Beautiful. So pretty much, so we're talking about two angles of real estate investment. Number one is appreciation, and you can flip it and make it even more for first-time home buyer. But another side is a rental, right? And you always was cash flow, and even $400 cash flow after your mortgage, it's still cash flow. It's your car payment. It's your whatever it is. And but what is the rental rate nowadays for this property?
Well, we are well below market rental rates.
Market trends.
Market rent for that property would probably be about $1,600, and we're $500 below that because I've had the same tenant for 10 years.
That's nice. It's also you don't have turnovers, you don't have those expenses accumulate, and probably they fix renovate some of the stuff by themselves. So it works out. You kind of save it in the long run, and you don't have those turnover costs. You don't have to spend your time and money to it. But even though if she would move, your rent will be now 1,600. So it's showing the power of holding real estate long term and not selling it. So I love it. Okay, so after you got your first property, then you partnered with your parents, and then you got second property, right?
Yeah, we actually bought a small portfolio. It was 3 lots that are right next to each other. One of the lots had a duplex on it, another lot had a duplex on it, and then the other lot was vacant. And we bought it all as a package. I think we paid $150,000. No, we paid $145 for that whole package. Again, we bought it from a wholesaler. One of the properties was very, very damaged. We did not know that. I bought that sight unseen. That is a lesson that I learned about not doing. I bought it sight unseen, and we ended up spending more. We spent $150,000 renovating just the one building that had been damaged. And so it ended up being twice as much. The total cost of acquisition was twice as much, but that property cash flows really well today. We ended up getting 4 rental units out of it, and still it's not the type of property that's going to have huge amounts of appreciation based off its location, but it cash flows really well, and so we're excited about that.
It's all about strategy. Sometimes you're looking for appreciation in some houses for next to some of the markers like hospitals or university schools. Another way is a cash flow. Cash flow is also great. It depends on your strategy. And so what did you do with the property? So you bought the property. After you repaired, did you refinance it? Have you done anything after that?
No, we were fortunate to be in a position where we had private capital. And again, my dad had some cash. And so we bought it all cash. We ended up actually having to borrow some money at one point through the renovation because we had run out and we had underestimated the amount of work that was going to be required. And then later on, my dad actually bought out that note. And so my father actually has financed that property, and our business entity that owns it pays him a mortgage. And so we've done as much as we can to keep this money in the family instead of going to banks. We're happy to pay, I'm happy to pay my dad a decent interest rate on it because it keeps that money in the family. And it's part of my legacy, right? It's part of what he will potentially leave to me someday, although he tells me he's going to spend it all before he dies, and that's okay.
Might as well. He earned that money.
That's right.
Listen, but he has hedging over inflation, right? So he making his 5, 7, whatever it is percent, and it's just not burdened in the bank, and it's much safer than some collapse in bank, and what's gonna happen with your cash in the bank. I love it. Okay, so you went to credit right away. So instead of going to the bank and doing some other stuff, you just ask your family and your immediate circle, and you found that money, and might as well. It's a win-win for everyone. and you just went with it. I love it. Good
Yeah.
strategy. Okay,
Well,
so
so, and let me tell you, it's hard. Sometimes people tell you not to do business with family, and that is a pretty safe rule to live by. I don't think that I'm not of the opinion that you can't do business with family. Just if you're going to, make sure that you document everyone's role, right? And what the terms of the agreements are. If you document it, if you put it in writing and everybody signs it before there's any kind of a problem, then when there does become a problem, everybody can just reference back to the document and you can salvage the personal relationship because it's not personal, it's business. And we all agreed to this when there was no emotion involved. So here's what we've agreed to. And so we've done that. And then the other part of it was, as I was learning all this stuff about real estate by listening to the podcasts and books and educating myself, I was having these conversations with my father about what I was learning. I was telling him all this stuff that I was learning and how to implement these ideas. And so I was building credibility with him in the process. And so if there's somebody listening and you're thinking, well, my family would never loan me money for real estate. Well, that's because they don't trust you know what you're doing. And so if you're not having conversations and educating them about what you're learning and how you're going to implement stuff, then they're probably not going to trust you. And so you got to talk about this stuff if you want people to know that you know what you're doing and that this is what you're into.
the same applies to your friends, right? No friends, no business with friends and family. The same applies here. But the first step is, again, I think you're right. It's about educating and bringing the point. Hey, listen, that's what I'm doing. That's what I'm looking. That's what I learned. And now let's try to implement. Maybe we can collaborate together. But a key point here is a very important thought is you have to communicate it in advance. You have to write it. You have to note it. And now everyone is on the same page what's going to happen, what kind of expectations, and what will be the next step in terms of if something goes wrong, if something needs to be renovation, someone needs to step up the game and do that renovation. Then okay, I'm gonna handle it because you front us money. Now let me get that part of the deal. Very good. So okay, you got your taste of real estate. At what point did you decide that you want to open your own brokerage and you want to go into this direction?
Yeah, it's a great question. So it wasn't until I became a father or found out that I was going to become a father. So I found out that I was going to be a father around Christmas of 2018. And that really had a big shift in my mindset and in my view on work and time because I wanted to be the type of father that never missed an event. My little girl likes dancing. She likes ballet, and she really likes me to come and see her perform and participate in her classroom. And I knew that if I had a traditional job, that could always get in the way. At the time, I was traveling about 26 weeks a year, which is a lot. And so I actually decided first and foremost to go get a different job where I wouldn't be traveling as much. And so I ended up getting a new job working for ADP, the payroll company, with a division called the Marcus Buckingham Company, which I won't get into all that. But it was a really cool job. I really enjoyed it. I made $90,000 a year. I had great benefits. I had a great boss. And what I found was that my time, I had extra time during the day at work. I worked on a virtual team where the people that I worked with actually were in other states, but I was still required to go sit in an office not too far from my house here. And there were hundreds of people sitting around me in cubicles. I just didn't talk or work with any of them. So it was kind of odd, but I found myself with extra time during the day. And so I finally came home and I told my wife, hey, I think I'm going to go ahead and get a real estate license now. And we had talked about doing that when we first got married, which at that point was about 7 years prior. But I had this limiting belief about my ability to study. I thought I was a bad student and I couldn't learn online. I couldn't, the only way I could learn, I thought, was if I was in person listening to somebody teach me the content. And so I had resisted getting a real estate license because I realized that, I didn't have time to go sit in a classroom and, the other option was to learn online. And I just felt like I couldn't do it. And so, but once I was a father and I had that extra time, I had that motivation that I wanted to stop trading my time for money. And so my thought was, I'll get a real estate license. That'll let me see all the inventory and get access to better data. And with that extra data, I'll be able to find better properties and I'll build my portfolio over a 10-year time frame. And eventually in 10 years, I'll have enough passive income to replace my active income. I can quit my job. That was my thought process. And then along the way, if I help a person here or there buy a house, it'll just be extra cash that I can use to help put in my war chest to buy my next property and grow my portfolio. So that was my plan. Just get the license for my own purposes, maybe help out a person here or there. And so I started studying for it. My daughter was born in August of 2019, finished my test and was officially licensed in October of 2019. And I updated my profile on BiggerPockets that I was a licensed agent. They reached out to me and asked me if I wanted to be a part of the premium membership. They gave it to me for free because they were looking for more agents to be on the platform. And 6 months later, I ended up selling my first house to somebody that had filled out that form on their website. And When I sold that first house, I was stoked. It was fun, and I made $6,000. So I was hyped. And at that point, I decided, well, I'd like to figure out how I could do this more often. That was fun. And so we dove into trying to figure out how to do more. We actually ended up leveraging BiggerPockets as they rolled out their featured agent program, as it's called today. It was called something else at the time, but I ended up being one of the beta testers because they were looking for investor-friendly realtors and markets to be able to connect investors with. And so I signed up for that and started talking with people that were out of state looking to invest here in Central Florida. And we continue to do that to this very day. But also we had some local folks that were reaching out to us through that same medium that were looking to house hack as first-time home buyers. And so we kind of got into that niche. If anyone remembers what happened in 2020, the world shut down, right? COVID happened. And so it was a really interesting time. And then 2021, things really took off in the real estate industry. It was one of the best times to be in the business because it was so easy. And then things changed in 2022 and 2023 and 24, and now we're in 25.
So Tyler, you just dropped a very important piece of information, house hack. Can you explain our listeners what is house hack and why it's beneficial for the first-time home buyer?
Yeah, so a house hack is when you purchase a piece of residential real estate as a primary residence. You can do this with conventional or FHA financing, which is some of the lowest down payment funding options that are available out there. And you rent out any unused portions of the property. So a lot of traditional house hackers are buying duplexes, triplexes, and quadplexes. Even though these are multifamily, they are residential multifamily, and so you can use an FHA loan, 3.5% down payment, to acquire these properties. And in fact, if they're beat up, then you can use an FHA 203K loan, which is a renovation loan, which is a very powerful loan product that allows you to bake in any renovation costs into the loan itself. And for people that may not know, when you use an FHA 203K loan, you can actually borrow up to 110% of the after repair value on a property. And so it's a very powerful loan product for people that want to add value to real estate or buy something and fix it up and make it their own. So that's what house hacking is. Now, you can also do it with a single family home. The first house that I ever sold was actually a house hack to a young couple. They ended up living in the primary bedroom of that 4-bedroom house and renting out the other 3 rooms to individuals. That's not the kind of thing I would do if I was newly married, but hey, more power to them. If you've got the drive and determination, no kids, and it works for your lifestyle, then it's a great way that you can buy a piece of property and have somebody else help you pay for it. And it's the easiest way to start building a real estate portfolio, in my mind.
Yes, it's like it's either you rent other units or you do a co-living kind of scenario where you live with other people. And some people like community style. So it's whatever you guys prefer. And if you like single family homes, by all means. And I like what you mentioned. It's very important because you're saving those costs. And I personally, it was my second property. I bought it next to Manhattan, next to George Washington Bridge. And we got a triplex and we lived in one unit, me and my wife. We also got FHA. We didn't come from money. And we rented 2 other units and we lived for free for the next 4 years in the prime location. So by all means, whatever works, whatever your situation is. And it's what's interesting also when you buy multifamily versus single family. Tyler, can you explain how the pre-approval works for multifamily versus single family? Because you can get approved for a high limit when you buy multiple units under one roof.
Well, so the benefit of going with a multifamily house hack versus a single family house hack is that you can actually use the rents for the other units to help with your debt to income ratio. So typically you get about 75% of the rents allocated towards your income. And so if a property is bringing in, for easy math, $1,000 a month, well, then that adds $750 a month to your income qualification levels. And so that's why buying triplexes and quadplexes can be really, really powerful, because the rents from the other units actually can help you qualify for the loan as income to help with your debt to income ratio through the qualification process.
Yeah, so basically, if you qualify for a single family, it's 200,000 up to 200,000. When you buy 3 or 4 family, you can go maybe 3 or 400,000, depends on how much income it produces. So it doesn't really much dependent on your personal income anymore. Now it's also dependent on the income, how much it can produce. So it's a very powerful strategy. And what I like about your story, Tyler, is that you started doing brokerage from investor experience. So you soaked all this information and you come in as experienced investor already with some information, with some experience on the buying and renting this property, renovating, and you started offering the services to other colleagues and investors out there. And for our listeners, BiggerPockets is like a social media for real estate investors. That's we network, that we learn about stuff, we listen to podcasts, and we can collaborate. And I know you've done a lot of work collaborating on BiggerPockets. So tell me, your clients from that lead flow from BiggerPockets, was it mostly first-time home buyers or experienced investors trying to invest in Florida?
Yeah, so we actually do these leads in a couple of different locations. We do them here in Orlando, and then I've got a partner in Atlanta that services these clients as well. And the leads we found are different in different markets. For here in Orlando, we actually see a mix of different investor types. I would say that the bulk of the people that we talk to are newer in real estate. They're looking to get into it either for the first time or get their second property. Or maybe they have a rental where they're at, but they'd really like to have a short-term rental here in Florida. Because Orlando is a very unique market, we've got Disney World right around the corner. There's short-term rentals here in our market. There's long-term rentals here in our market. There's people that look to do fix and flips here in our market. And so it's a very eclectic space. So we get a mix. I can't tell you that it's all first-time home buyers or experienced investors. It's a mix. And so we just do our best job to talk to folks, learn where they're at in the process, figure out what their goals are, and then see if there's something that we can do to help them achieve those goals based off of what we know can and can't be done here in our market.
Does it usually come to you with a clear plan? Okay, I want to flip or I want to buy this house. Or do you still try to communicate with them? Explain, no. Listen, I think single family is great, but have you looked in multifamily? Do you try to explain them maybe a better way how to invest, or do you just focus on what they solely prefer?
Yeah, I mean, it kind of depends. Some people come with a very clear plan of what they want to do, what they're looking for, and that's great. That's very helpful to us. Some people aren't quite sure, right? They know that they want to do something, but they're not really sure what the best options are. And so in those cases, we're willing to talk through with them the pros and cons of each different investment, investing strategy, talk to them about what we think works and what we think doesn't. And then we just let them choose ultimately. But it's a mixed bag. Some people are very clear on what they want to do, and some people we need to kind of talk through and educate a little bit.
So what does your business look like today in terms of services, clients, and markets? Where do you focus right now?
Yeah, so today we have 13 agents on the team. We service all of Central Florida. We've done sales in Tampa, Daytona, as far as Fort Lauderdale, far south as Fort Lauderdale, as far north as Jacksonville. I think we actually are going to be doing taking an 8-unit to market in Tallahassee here in a few weeks, depending on when this airs. And so we have access to every market here in the state of Florida. Most of our business is here in Orange County, Seminole County, Osceola County, Lake County, and Polk County, which are it's about an hour and a half from Orlando is typically what we service on a regular basis, but we can help folks wherever they have a need.
Yes, and what I like actually is again your real estate background as an investor, because investor usually they need to look for investor friendly broker, right? Realtor who actually knows what they're talking about and can adhere to their strategy and actually focus on what they're looking for. And this is what is beauty of your company, because you are spearheading this process with your own experience and you can steer exactly the direction what they need because you got all this knowledge throughout the years.
Yeah.
That's it. Yeah, go ahead.
I was actually, you bring up a good point. I was actually surprised when I got into real estate to find out how many real estate agents, licensed agents, have no idea about the investment side of things. And many of them have represented people on investment deals. And so, it's one of those things, if you're thinking about buying in another market that you're not familiar with, connecting with somebody that's actually an investor in that market who's also licensed and can help you in that process, I think is critical, because otherwise you almost have the blind leading the blind, right? Real estate agents are notorious for saying yes to anything because they really want a commission. And so there's very few real estate agents that if you ask them, do you know anything about real estate investing, that they're going to tell you no, because they want the business, right? They know how to do a transaction, and they're just going to try to wing it or make it up, I guess. I don't know. But I think there is a very big disparity between agents that actually understand investing and agents that just know how to do transactions.
I think that's a little problem in the space. I feel like everyone should, if you believe in the real estate and you like to be in the space, you kind of need to try it yourself. And I had my own experience when I was buying a property, 7 unit. I was bidding on it, and the price wasn't there. So I learned about the strategy seller financing on BiggerPockets, and I tried to pitch it. The broker said, "No way, he's gonna take it. It's not gonna be a possibility." So I took over conversation directly with the seller, and it took me 4 months to negotiate, but I closed the deal with 10% down, 5% interest for 4 years, and it propelled me to another level. And I was able to get another seller financing because of that, and I have some experience. But they will tell you no if they don't have this experience. So you have to educate. I think it's also what you said. It's very interesting, and I think it relates to other services, right? Like when you hear this financial advisors, investment advisors in the bank, they advise a lot of people to invest their money in certain assets and certain tools, but they don't have their own investment advice. So it's like investment advices without actual experience is not super relevant. The same applies to real estate. And here's my second question after that. The most important thing one is educating people, and that's what you're doing. So I noticed you're big on educating in general with people. What inspired you to start creating content, and how has it helped your business to grow?
I think the biggest benefit to creating content is just being in front of people and staying top of mind. I never really wanted to be a content creator. I still don't want to, but I also understand that in our digital world, we have to fight for people's mind share. And so by having content, by putting out content, by constantly being on social media and posting all the time, I'm just doing what I can to stay in front of people and stay top of mind and make sure that people remember that Tyler's in real estate, so that when they have a friend, a family member, or a personal need related to real estate, hopefully I'm the first person they think of and they call and say, hey, I've got this situation, or I need this resource. And so that's really the ultimate goal for me, is really just to stay in top of mind with people. And then also, when you show people that and you just add value without any ulterior motive, that's how you build trust. And so that's the other part of why we create content, is just to try to build more trust with people and make sure that when we do get an opportunity, we're the first people that they call.
So a follow-up question: do you think content becoming a required part being a modern real estate professional?
I think you almost have to do something content related. And maybe you don't have to. It really just depends on how you build your business, right? I don't have a big network here in Orlando. I'm not originally from here. I didn't grow to school here. So I didn't have a big network of friends and family like they traditionally teach you in real estate. When you get a license, call your friends and family. I didn't have the ability to do that. And so we've really had to look for other ways to build that network. And we use social media as one of those ways.
Have you received over the years of you doing this stuff feedback or results of you educating people on watching your videos or reading your educational posts?
I mean, people say, we've had people say thank you, or that's good. We've had a couple people call us and decide that they wanted to work with us because they saw videos somewhere or they saw a piece of content that we made. It's not a ton, right? There's definitely people out there in the world that do a lot better than me in converting opportunities from social media. But again, I think it just helps to build your authority and to position you as an expert. And that's really critical when you're talking about somebody's largest financial transaction of their life. And in most cases, when somebody buys a piece of real estate, especially if they're buying a home to live in, there's a good chance this might be the largest financial transaction of their life. And so they're going to call somebody that they trust or that they feel knows like what they're doing. And so by putting out content, by being educational in nature, by giving away stuff for free, it helps to build that authority and build that relationship and rapport with otherwise perfect strangers.
And educating. And I think it still boils down to educating people to make the best decision out of it. Because a lot of people can think that they're scared of real estate, they're scared to make this move. But maybe listening to one of your videos and watching it, they'll be okay. Now I feel a little, like you said, building trust, but also feeling them comfortable that they're doing the right thing, or they're not overthinking and they're not over calculating themselves. They're not going into analysis paralysis because they read about it and they don't know what to move. They don't have people in their network and the immediate circle who's actually investing in real estate or buy real estate. And maybe it's one of the first, and now they need someone else who can trust and grows it. So tell me, are you still active on BiggerPockets as well?
Yep, we're still active on BiggerPockets. I learned early on that you can go in and set up keyword alerts. So you can go into your profile and you can set up keyword alerts so that when somebody posts something in the forums with your keyword, you can get an email notification about it. And so we have the cities that we service set up as keyword alerts in BiggerPockets, and every morning I get an email that tells me about all the forum posts that said Orlando or Central Florida or Lakeland or Winter Park or Winter Haven, the areas that we service. And we focus on adding value. So we jump into those conversations, we answer questions, we provide as much value as we possibly can. And again, just try to be in front of people, try to be a resource for folks here in this market, see if we can gain some trust and get the opportunity to potentially help them in the future.
And is it all coming just from you being present on this platform, or do you educate your team also to become present, to be part of that ecosystem?
What's funny is I have probably educated over 300 real estate agents on the exact process I've used to find clients through BiggerPockets for free. I mean, I also pay for leads through that platform, but I've done it for free, and I've educated probably 300 people on how to do it for free. As far as I know, nobody's really doing it like I do. But that's kind of the world that we live in real estate. You share what you know with a bunch of people, and you're lucky if 10% of them go do anything with it.
Yeah, it's a reality. Not everyone cut for that sun, and it takes dedication, focus, and persistence to keep pushing in that direction. Every day is a battle. You need to get out there and you need to make your input in the world. I like that you are focused and you're still doing that today. And I think it's very important for you and your business, and it looks like you're doing pretty well for yourself. So, Tyler, let's talk about market and outlook, what's going on right now. What's your current take on the Central Florida market? Any trends or changes you're watching closely?
It's a buyer's market, most definitely here in Central Florida. We see more and more inventory coming to market. There's over 6 months of inventory already. And I think we're starting to see more and more pain in the real estate market. I follow some folks that talk a lot about data, and it looks like we've got more FHA foreclosures that are starting and pre-foreclosures that are in process. Unfortunately, we live in a hyperinflation society right now. We printed a lot of money during COVID. That caused a lot of inflation. A lot of people are hurting on a day-to-day basis. They can't afford to continue to live the way that they did before. And so we are seeing more and more pain in the market. Unfortunately, I think it's going to get worse before it gets better. It seems like Florida kind of leads the way in how this stuff plays out. If you look back at '08, it was kind of the same way. Florida was hit really, really hard. And I don't know that it's going to be as bad as '08, but we are starting to see signs where there's a lot of distress in the marketplace. More people are trying to sell. There's more and more price reductions. And so it becomes a buyer's market.
So you're talking about Orlando specifically, or is there any other cities that you can pinpoint that you can see much heavier reduction and much heavier damage?
Orlando is like that. Jacksonville, Ocala. I don't know. Florida in general has a lot of inventory. When you look at the condo market in Florida, it's twice as bad. The condo market is really, really struggling here in Florida due to multiple factors. One of them being some of the new laws that went into effect here in the state of Florida in terms of what condo associations have to do on an annual basis in terms of budgeting and repairs, and some additional engineering studies that have to be done every few years. And so it's challenged the condo market significantly. There's a lot of people that can no longer afford their condos because the HOA fees went up way too much. I mean, I'm a prime example. I can still afford it, but I'm an example. We own a beach condo we acquired a few years ago over in Ormond Beach, Florida. And we do short-term rentals when we're not there, but otherwise we use it personally. The HOA fee went from $750 a month to $1,440 a month. It almost doubled, and that's some people's mortgage payment. Well, fortunately, the HOA actually reduced the fee a little bit, so now it's only $1,250 a month, but it's still very expensive. And there's other condo communities that have been hit with large special assessments or massive increases in their HOA fees because they have to fund their repair budget and they have a shortfall or a deficit. So they're having to make it up very quickly in order to be compliant with state law. And so we've seen a lot of condos on the market. There's probably twice as much inventory in the condo market. And so there's a lot of pain there. Some investors might be interested in getting into that market. It's not something that I'm really interested in. I wouldn't necessarily tell people to go do that. And if you are, that's great. Just make sure you're doing tons of due diligence, make sure that it works out for you in terms of cash flow.
And a lot of people, snowbirds who has secondary home here, they probably got hit with this additional assessment and additional HOA, and they're like, and probably taxes went up, and they're like, why do I don't have it nowadays? I used to have a townhome in St. Pete, and I sold it back in 2022, I think, or 23. And right after I moved out, 6 months after that, they got hit with reassessment, like 60,000, and which I didn't know about anything, and I was shocked as well. And it was after the secondary meeting, and their HOA fees went from 400 to 750. We're like, wow. And I have another relative in Fort Myers, and it also have the same thing. They got the assessment like 25,000, and the HOA fees almost doubled after all these hurricanes and what happened. So it's a very, very interesting time. And they used to have 2022, 21, they had like a couple, maybe one property in a huge community. Now they have like 20 properties on one block. I just keep coming up. But I'm living in Fort Lauderdale, MSA, and I can see the Fort Lauderdale Miami market still holding pretty well. I talked to quite a few sellers, and they just, we're not planning to sell cheaper. We're not planning to negotiate. So some of the sellers are still live in 2021, 22 time. What is your output on Jacksonville and Orlando markets? Are the sellers ready to negotiate? And how much you see usually you can negotiate percentage-wise?
I think some sellers are ready to negotiate. I think it's unique to each person's situation. But when people are selling here in Orlando, right now I feel like the only people that are selling are the people that need to. Right? Either they need to move or they have a life event, right? Either they need a bigger house or they're getting a divorce or what have you. We're seeing that people that are selling today need to sell because either they have a financial issue or they've got a life event that's making them do so. The reason why is because folks have good interest rates from 2021 and early part of 2022. And so why would they sell and get rid of that? So a lot of people that have those really low rates are holding on to them unless they have to sell because of some sort of a life event. We don't see too many people, listing their homes in hey, I just want to see if I could sell it for this much, right? And in fact, when we meet with sellers, if they don't need to sell and they're not willing to follow our pricing suggestions, then we're just turning down the business. Because I'm not willing to spend money on listing a home that isn't going to sell because the seller's not realistic on what's happening in the market, pricing issues, or condition of their property. And so we'll just pass on that business if they're not realistic with what they can get for their property.
Yeah, you can't win all the business. Sometimes it's better to say no, just to make sure you preserve your brand identity and you make sure you can deliver what you promise. You can just take all the business. So with interest rate, inventory, and affordability shifting, What's your outlook for 2026?
I think it's going to continue to be par for the course here in Florida. I think we're going to see more inventory coming to market. I think we're going to see more price reductions. I think this is going to carry over into next year. I don't see anything coming in the way of reduced mortgage rates. In fact, I think it's going to be the opposite. I think we're going to continue to see mortgage rates increase. Eventually, there will be a straw that breaks the camel's back. And I think we're going to see a major correction in the market. Not major like we saw in '08, where we're going to lose 50% of values, but maybe 10, 20% of values, because it's just not sustainable. Most people can't afford to buy right now because interest rates are too high, insurance rates are high, cost of gas is high, electrical costs are going up, food costs are going up, cost of goods are going up. And so it's just more expensive to live. We're not seeing wages keep pace with the inflation that's happening. And so as a result, I think there's going to be fewer people in over the next 12 months that can buy, but there's going to be more people that need to sell, either because they have some sort of a life event or they simply just can't afford it.
And people who bought at a higher price range a few years ago, now they got hit with reassessment and their taxes went up like drastically. I know I've seen some property just went, I don't know, 5 times in taxes. It just keep creeping on that direction. So they got hit with taxes, HOA, and insurance costs, and now they can't afford the house they bought a few years ago, and it just devastating. People trying to flee back to upstate, to Z states, and they just stuck because they cannot sell it and they're underwater. So we will probably see quite a few short sales, in my opinion. I agree with you here.
We're seeing more and more. There's about 40 short sales in the five. Right now, there's 40 active short sales listed on the market in the 5 counties that we cover, and we anticipate that number is going to go up. And specifically in the Disney market, we see some communities in the Disney market where prices for real estate soared during COVID for a multitude of factors. And now those same homes, if you were to try to sell them today, you could take a $200,000 loss. And so you have to get really creative. Fortunately, because I have a background in real estate investing, we actually know how to get creative. One of the things that we can offer to folks is our price optimized listing strategy, which is how we can get you more for your home than what you could typically get in a market. Not everybody's going to qualify. It will depend kind of on the conditions of their current mortgage, interest rate, terms, balance left over, that sort of thing. But we've successfully helped people sell for well above what market prices are because of this strategy. In fact, we have a client who's got a property out in the Disney area where he paid about $700,000 for it a couple of years ago during the height of the market. Today, comparable properties in that community, same size, same square footage, same layout, they are selling for around $550,000. And so you can imagine the idea of taking a $200,000, $150,000, $200,000 loss is not appetizing to a person. And so we have to get really creative, but we've successfully been able to help people exit those properties and maintain their equity, save themselves from that $150,000 loss through our price optimized listing strategy. So if you or somebody you know has a property, they're not going to be able to sell it for what they want, but they've got one of those low interest rate mortgage from 21 and 22, we've got options for them to help them maximize the value in their property.
Yep. It's coming from experience, and there's also strategies like sub 2, right? You can structure that kind of stuff with experienced investors. Yeah, but it's also not 700 minus 550, you guys losing 150. They're losing much more because a commission, when you sell, there's commission to cover from the side, and there's those expenses, attorney fee, if you have any other expenses. And the same side on the buying side, you also have to pay some fees to close on the property. So you're going to be much more than that number. And upkeep of the property owns, of course. Okay, let's switch back to your personal investment approach. I heard you've done some real creative seller financing deal. Can you break that one down for us?
Yeah, so last summer, my family and I, our investment company, had the opportunity to acquire a 12-unit light industrial complex in the state of Oregon. And this was brought to us, actually, some family of ours owned this property. They had been trying to sell it. They hadn't been able to find a buyer that was willing to buy it. And they specifically wanted seller financing. They owned the property outright. They didn't have the ability to depreciate it anymore, and they were ready to retire. They wanted to kick their feet up and not have to deal with the property anymore, but they didn't really want a taxable event right away, where they were going to have to pay a bunch of capital gains on the property, and they really wanted to maintain income from the property. And so they actually were specifically looking for somebody that would take on seller financing. So we talked about it with them. We looked at the price. We figured out a price that would work for us. We found some terms that would work for everybody. There was one term, though, that I had a big issue with. They wanted a 10-year prepayment penalty on this loan that they were giving us. And as some people may or may not know, in commercial real estate, you typically want to turn those every 5 years, or at least that's what I've read. That's what I've understood. This is my first commercial property, and so we'll see how it goes. But you typically want to turn those in a 5-year period because, one of the major benefits of commercial real estate is the ability to do cost segregation studies, which help reduce your tax, but you can only do that over so many years. And then after so many years, you basically sucked all the marrow out of the bones. And typically you're able to increase the value of the property by increasing the NOI, or the net operating income. And when you increase the NOI, you force the appreciation on the asset. And so typically we see 5-year turns in commercial real estate. And so a 10-year prepayment penalty did not sound appetizing to me. Because I wanted to have options. I wanted to have exits with the property. And so I went to the seller and I just asked them if they would consider allowing me to recollateralize the debt. I told them it's fine. I'd be happy to not pay you for 10 years if I can take the debt and put it on a different property within that 10-year time frame. And so I learned this strategy from a gentleman named Jeff Stevens. He calls it supercharged seller financing. And so this is what we proposed to them. And so we went back and forth, but eventually we agreed that after a 3-year hold period, we would have the option to recollateralize the debt against a new asset, so long as that asset was worth more than the note and or the cash flow was more than sufficient to cover the note. And so we do have to have some qualifiers on it, but otherwise I basically unlocked about $1.5 million in seller financing that I can use in the future for other acquisitions. And so as we look at this, now I've got options. When we hit the 3-year mark, I can go refinance and get commercial debt on the property, at which point I would still own a cash flowing asset, and I would have about $1.5 million that I have to go use to buy something. Or we could just sell it, pocket whatever our profit is, and then recollateralize the debt. So this is what our plan is with this. And I was really excited about doing this deal simply because of the seller financing and the ability to recollateralize the debt, because now I've got a bunch of money that I could use to rapidly grow my portfolio by rolling it from one asset to another, to acquire, stabilize, increase value, cash out, refi, go buy more, and rinse, repeat over as long of a period as I possibly can to keep it rolling.
This session went from beginner to advanced real quickly. Tyler, let me unwind a little bit. You have a lot unpacked here. I didn't want to interrupt you, but for a beginner listening, you're like, what hell he is talking about? Okay, guys, let me unwind a few terminologies that we will use in here. First is seller financing. What is seller financing? It's basically a seller becomes a bank. So he becomes a note holder. Like when you go to the lender becomes a note holder in the property. He collateralized property, but he loans you money. Now, instead of the bank, the seller is the bank, and he has the same exact rules and rights as the bank. And if you don't pay your loan, he can foreclose on you, like the bank. So he doesn't have much risk in this deal because he knows the assets, he knows you potentially. If not, he still has some rights and laws that his attorney put together to protect him and his assets. Now, Second part that Tyler mentioned is, hey, what the hell is cost segregation study? So cost segregation study is every property depreciates over a life term of its life expectancy.
27 and a half
Residential.
years is the typical depreciation rate of real estate. And a cost segregation study, essentially, there's value assigned to all the parts and pieces of a piece of property, right? The door is worth $100. The windows are worth $300 or what have you, right? And so each part and piece has its own value. When they do a cost segregation study, instead of looking at the full value of the property and depreciating it over 27 and a half years, they look at all the different parts and pieces of the property, assign value to each component, and then they're able to accelerate the depreciation. And so instead of taking that depreciation over 27 and a half years, you can do it over 5 years, and you take a much larger loss on paper by depreciating the individual parts and pieces.
And okay, this was a residential 27 and a half. You have a commercial asset, so it's going to be 38 years probably, somewhere in that mark. But why do we need depreciation, guys? Because some of you makes a good living. They make 200, 300,000, and this specific bracket of income, and they have specific tax liability. But when you reduce, if you're active real estate investor, you can reduce your depreciation to reduce your tax liability, and now your taxable income, instead of 300,000, it becomes 50,000, and now you're in a bracket for like, I don't know, 10%, whatever it is, and now you're paying minimal taxes. So you're saving a ton of money by depreciation your income on that year specifically. Tyler, tell me, is this because forced depreciation is going down, right? This year, I think we're already at 40% we can depreciate maximum.
For the bonus depreciation, I don't recall
Yes.
where we're at this year. I let my CPA handle that. I don't worry about it.
Another good lesson. We
Tax
have
professional.
really good team, tax professional, and this is going to be very important for your growth. Okay, real quick. I know we have quite a few minutes left. I know it's been a long show already, but tell us, what are you looking to grow personally as investor? You leaning more towards residential, long-term holds, maybe commercial? What are you doing?
Yeah, so the reality is that I'm the type of investor where I'm just an opportunist. I look for good opportunities, not specific asset types or strategies. I will more than likely steer clear of anything like short-term rentals, simply because those are active income strategies. Short-term rentals are not passive by any measure of the imagination. You're running a hotel, for lack of a better way of explaining it. People just need to understand you're kind of running a hotel, and that's an active business model. So we stay away from short-term rentals. So if it's a long-term rental with good cash flow, or it's in a killer location where I can see appreciation is going to be massive over a time frame, or if it's a deal that has some killer seller financing terms, right? I will buy real estate simply for the seller financing if the terms are right, and the property will be able to carry its own water and have appreciation over time. And so, again, I'm more of an opportunist when it comes to my personal investing. So if somebody's got a really sweet deal, or they've got a deal they think it could be really good, they're not quite sure how to figure it out, I'd be happy to come alongside with them and figure out how to make it happen, whether that's just by bringing my knowledge and information to the table, or potentially if we need cash or what have you, we could figure out how to make it work. But I'm more of an opportunist than a specific strategy. I don't have a unit goal that I'm going after. And then my other attention is purely focused on growing our real estate sales business and sales team here in Central Florida, and turning this into a business that runs itself even when I'm not here. That way I have one other asset that's in my portfolio that's generating cash.
I like how you say you're opportunistic, and I think that enabled you to think out of the box, and you figure out this creative financing, but you were even more creative in this creative financing, and it enabled you to have this transferable note. Basically, so guys, so you understand. Basically, Tyler here, he's turning his seller to a private equity that he can tap into his future deals, and I think it's worth a lot. Okay. Tyler, I have last few questions for you. Quick hits, lightning round. So whatever comes first to your mind, let us know. One book or resource that had a big impact on your mindset.
So a big impact on my mindset. Let me pull it up. It's an audiobook. It is The Ultimate Jim Rohn Library. If anybody know who Jim Rohn is, he is the father of personal development. If you know who Tony Robbins is, Tony Robbins learned from Jim Rohn. So Jim Rohn Ultimate Library was a great book that helped us shift our mentality, my mentality and my mindset to being more growth oriented and just owning your world, right? If you live in a world of chaos, own that. That is a byproduct of your decisions. But the good news is that we can start making better decisions.
Taking ownership. Okay, most important trait a new business leader or investor should develop.
Risk tolerance, the ability to just take action in spite of fear and risk. Unfortunately, analysis paralysis will keep most people on the fence. I had absolutely no idea what I was getting into when I bought that first piece of real estate. I had no idea how to analyze the property. I think my ignorance was bliss to some extent, but the ability to just take action in the face of risk and potentially fear, I think is a great skill set that people are going to need to develop, or a mindset that they're going to need to be able to develop in order to have success.
Very good. Okay, one thing you wish you knew earlier when getting started in real estate.
Money is easy to find if you have a great deal. And so just find great deals.
Yeah, it's a chicken or egg usual problem. People overthink this process, but focus on your strengths. And sometimes people are good with finding money, so they can find a partner who finds the deals.
Right, but a great deal will always find the money, right? Because it's a great deal. A great deal will always find the money. You'll always find a private lender or a hard money lender or somebody that will give you the money if it's a great deal. So just focus on finding great deals.
Because it's a scarce kind of element. There's not enough properties with a lot of investors with money. Okay, Tyler, I have one last question for you. If someone wants to work with you, follow your content, or just to connect to talk real estate, where is the best place to find you?
I mean, if somebody wants to work with me, the easiest way to get a hold of me is just call my cell phone, 407-590-9858. And if you just want to learn, follow along, see what we're doing, you can find me on Facebook, real.tylergibson, or Instagram, real_Tyler Gibson. We've got content that we put out there every day.
Love it. Thank you. Tyler, I appreciate you coming on. Love the practical value you bring into your clients and our audience. It can feel overwhelming for people, but you break it down in a way that really empowers them and help to move and grow in the right direction.
Thank you. It's been a pleasure. Happy to be here.
Very good. And to everyone tuning in, thank you for being here. Don't forget to subscribe, and as always, keep moving forward.